Welcome back, dear students. Today, let us see the concept of input tax credit. So, to understand what input tax credit is, first let us learn what is cascading effect. So, before implementation of GST, okay, before implementing GST in India, we had other indirect taxes that are charged on the supply of goods and services. Okay, we had various other taxes that are charged by the state government and central government, and for even for the interstate sales, they were charging central sales tax. So all these taxes were there before the implementation of GST. So under previous tax structure, when they're taxing on a particular product, that adds value to the cost of the product, and then the value of the product would go up. Okay, and thus the amount that you pay as tax will also go higher, and when you pay tax on tax, again it increases the tax that is paid. So now let us take an example. Look at this example where we have the tax structure that was there before implementation of GST. So think of this: before implementation of GST, the cost of manufacturing a particular car, okay, let's take this for an example. It is costing you somewhere around 2,50,000. So the cost of manufacturing a particular car is amounting to 2,50,000 rupees. And on this, the seller would obviously add profit to it. So he's adding profit of 20%. Okay. Now this 20 percentage on 2,50,000 is 50,000. Yes. So if this 50,000 is added on to the cost of the product, then you get the total cost. Yes. So now with the manufacturing cost, after adding profit, the total cost is 3 lakh rupees. Okay. Now, so this car now has value of 3 lakh rupee, and that is being sold. So on your sales, you'll have to pay excise duty. Okay, excise duty, and that is charged at 10%. 10% on 3 lakh is 30,000. Now, after paying excise duty, the cost that you have incurred in manufacturing and bringing that to the market would now become 3 lakh 30,000. Then on your sales, you would be charged VAT. Okay, VAT is value added tax, and that is being charged at 10%. So on 3,30,000, if it is charged at 10%, that would amount to 33,000. So now if this 33,000 is added on with the cost after tax of 3,30,000, now the consumer would be paying total cost of 3,63,000. Yes, so now you can understand this tax structure where a particular product is getting taxed. Again, that tax amount is added to the value of the product, and again the tax amount is being charged. Yes, this was prevailing in India under old taxation system. So now the consumer would be paying 3,63,000 under old tax regime. Okay. Now, after implementing GST, so after implementing GST, all the previous tax structure has been removed. Yes, everything is subsumed except one or two taxes, still custom duties and all, it is there under GST. So apart from those taxes, all the other taxes, majority of the taxes are subsumed under GST. So what happens under GST? So now the manufacturer would be charging the same 2,50,000 rupees for charging for manufacturing the car. And on that manufacturing cost, he'll be charging profit of 50,000 rupees. Yes. So now the total cost is same as 3 lakh. Now they do not have excise duty, so they need not pay excise duty. So that comes to 0 rupees. So now after excess duty, in the sense we don't pay excess duty, so now it is again 3 lakh rupees. And then there is no VAT, so that is also removed. And then they pay GST of 20%. Okay, so if they charge 20% on 3 lakh rupee, then that would amount to 60,000. So that becomes 3,60,000. Now if you look at the price that the consumer is paying on the same car, under old tax system it is 3,63,000, whereas under new tax, that is under GST system, it is just 3,60,000. Now the consumer has the benefit of 3,000. Yes. So the other option that you have under GST system is, on my inward supplies, if I'm paying GST, so that GST amount which is paid on my inward supplies can be availed as credit on my outward supplies. Okay. Think of this. My inward supply is worth rupees 1 lakh rupees. Okay. I'm liable to pay 5% of GST on that 1 lakh rupees, which is amounting to 5,000 rupees. Okay. And I'm selling that product to the consumer after producing or processing that raw material. Okay, after processing it, I'm selling that material. Now the worth of that material has become 2 lakh. Since I've processed it, 95,000 rupees worth has added on to that. So now it's worth rupees 2 lakh. Okay, and now I'm charging 5% of GST on my outward supplies, so that would be charged on my consumer, so they'll be paying GST of 5% on 2 lakh rupees. 5% on 2 lakh rupees would be amounting to 10,000 rupees. So what happens, I am a retailer or a manufacturer who has processed the material and I have supplied the material. So I would be collecting GST of 10,000. So what do I do with the amount that is collected as GST? I'm liable to pay that to the government. So I should be paying GST. But I've already paid 5,000 rupees on my inward supplies. So what I'll do is, I'll deduct that 5,000 rupees from this 10,000 rupees and I'll pay only remaining 5,000 rupees as GST. So that's the option that we have under GST system, and that is called as input tax credit. Hope you understood this concept. Thank you.